G'day and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us here at ausbiz. Let's take a look at what happened overnight. US stocks gaining on positive earnings results, while European stocks settled lower in the wake of disappointing results from ASML. Wall Street's major indices recouped some of the previous session's losses as investors rotated from mega-cap tech stocks into the small caps. US-listed shares of chipmaker ASML fell heavily after the company cut its 2025 financial forecast. And Nvidia defied the trend in tech, having slumped nearly 5% in the previous session. It recovered while Apple and Meta fell. Financial stocks were buoyed by strong earnings from Morgan Stanley shares surging to a record high after reporting strong profits following a sharp increase in investment banking revenue. And the larger regional banks were also higher after reporting third quarter results, including First Horizon and US Bancorp. And utilities gained, led by Dominion Energy, which has struck an agreement with Amazon for developing nuclear technology to power its data centres. Elsewhere, United Airlines shares took off after forecasting better than expected fourth quarter profit while announcing a $1.5 billion share buyback program. Delta Airlines and American also gaining. And US-listed shares, the gold miners, ended up being mixed, having earlier risen along with the price of bullion. And in Europe, the world's biggest luxury group, LVMH, reporting a 3% fall in third quarter sales in its first decline in quarterly sales since the pandemic, as demand in China and Japan weakened. Well, US import prices slipped 0.4% last month, the biggest drop since December last year, as the cost of energy products fell sharply. The data comes ahead of retail sales figures tonight that will provide insight into the health of the American consumer. Evidence of benign inflation has markets betting that the US Fed will remain on course to continue cutting interest rates. US Treasury also dipped, with the benchmark 10-year down for a third straight session to 4.01%, the 2-year falling to 3.93%. And the US dollar has hit an 11-week high. That's as investors ruled out another hefty interest rate cut from the Fed while pricing in a potential election victory by Donald Trump. His plan to implement tax cuts, apply looser financial regulations and higher tariffs is viewed as a positive for the dollar. Meanwhile, the British pound tumbled to its lowest level in 2 months after softer than expected UK inflation data offered scope for the Bank of England to cut rates more aggressively, while the euro slid to an 11-week low ahead of the ECB meeting tonight, and the Aussie having tumbled to 66.6 US cents. Taking a look at commodities, oil prices remain at 2-week lows on forecast of less global oil demand growth. Brent futures at $74 a barrel. Copper's up around 0.5%. Iron ore falling close to 1.5% to $104 a tonne. And gold has continued to appreciate, rising 0.5% to $2,673 an ounce, aided by lower bond yields. Bitcoin has continued its recent rally to be up around $67,500. Okay, so let's get across what is moving, particularly on US markets, and why. Ira Epstein joining us from Linn Associates. Ira, a very good day to you again. All right. Of course, we are in the midst now of US earnings season. What are your takeouts? Because we've heard from the banks that's largely been positive, hasn't it?
Well, the market was set up, and I think you realize this, for a weak third quarter. So we were all coming in, things are going to be bad, and we still could be. I mean, this is not supposed to be a stellar quarter, but the banks, as you said, were the surprise, and their trading divisions really racked things up. But I don't want to say it was easy. It hasn't been easy, but we've been in a bull market, and if you've been buying the leading stocks, if you've been buying the big name stocks, you made money. It's that simple. And that showed up today. So even today, what was it? We finished off with, was it Bank America today that finished up? We've got JP Morgan out of the way. We got Citibank. We've had Wells Fargo. Everybody's beating on it. Now we get to the secondary banks, and they're showing greater interest income. So that is good. And then, as you said, we've got what's going on with oil, prices dropping. That puts money in everybody's pocket. We're only 3 weeks away from the U.S. election. I think you're going to get, I don't know what you call four banks in a row going to make interest rate cuts, but I think it starts tomorrow with the European Central Bank. Then I think the Bank of Canada makes its move. The Bank of England's going to move. And I think the U.S. will go a quarter point. So I think between now and then, you've got four banks going in a row. They're saying that inflation is, in essence, been beaten. It's coming down. It's begrudges in each economy a little bit, but as a whole, it is coming down. We saw that today with the UK when 1.7% CPI numbers and even the service numbers were falling more than thought. That's going to get Mr. Bailey going, and we're going to get a series of cuts out of them too.
So, Ira, stateside, just in terms of what you're seeing at a macro level there, look, we've got retail sales coming up too. What is the state of the US consumer at the moment, do you think?
Well, every week we get what's called the Red Book sales, and they go week to week on you, and they were up another 5.6%. I mean, it's every week it's up 5%. So are we going to see a problem? I don't think so. Is the U.S. consumer buying big name items? I don't think they're doing that either. I think they're buying, they're smart, they're doing what they have to do. We had Prime Day, and you had more users on Prime Day last week than you have at any point in time. So that's a good sign that people are still looking for deals and doing the buying. The U.S. consumer has not gone away. They're not scared at this point. There's more jobs than ever, and with 4.1% unemployment in America, if you want a job, you have it. You have it tomorrow morning. That's pretty impressive.
As you mentioned, just 3 weeks now until the election. And I guess we should consider three outcomes here: a Trump win, a Harris win, or a contested election. That is very real. What is the potential for market disruption as a result?
A lot. If Trump does not win, they will find a way. He will find a way with his cohorts. They'll contest whatever they can contest. But we've already seen that that's a road that we're smart. We realize that won't happen. And we've had new laws put in since this. There were some election laws that have been put in. And if you read, you're seeing certain parts of the country, the different Supreme Courts within their different states, their highest courts are saying, no, you have to do your counts a certain way. It'll get straightened out. But don't think it's not a horse race. It's a horse race. The markets are betting on Trump. If you saw the interview with him on Bloomberg, just was it yesterday? And he had his favorite word of the vocabulary is what? Tariffs. And so he's going to tariff everybody. And he's saying, hey, you want to do business with America? You either open your markets where we can do business. Otherwise, we'll tariff you not 10%, 50%. You can either build a factory here or don't do business here. So he thinks that'll work. That doesn't happen overnight. That's number one. He talks grandiose. Not everything comes out the way he says. So people know him. Nobody knows anything about Harris. Harris in America is a huge unknown. She came out of left field on this. I don't know what her policies are. I'm not anti her. I'm not for her. I don't know enough about what she's really about. And they let her do very few interviews. I think she's going to do another one tomorrow for the first time. So America's got to figure out what that is. And if you think that works for her, wrong. If you're a hardcore Democrat, that's great. But I don't think enough people know enough about her. I go right in that camp. I do not.
Either way, Ira, neither candidate looking to tackle the debt situation in the States. That looks as though it's just going to grow and grow. How problematic is that?
Monstrous. Everybody kicks it down the road. You ever watch how we do the U.S. budget? We go to the 12th hour, then we stay all night through a weekend, and we get the budget done. But this time is very different. Number one, interest rates are taking a large part of our GDP. Somewhere along the line, we are going to stumble very poorly because we have to bite the bullet. Now, Trump's plan is that you grow enough, you can pay that down. I don't know if that's right or wrong. All right. I've read many essays, both the pros and the cons, and you hear that from Harris when she quotes the negatives to it and he quotes the positives. What I do know is America grew under him. But was that because of before him? We had the COVID situation. You were going to grow anyways. You're coming out of a situation that was just terrible. There's many things going on here that are just an unknown. I am one to believe that if the economy can support labor and labor can spend money, which we do in America, we don't save, we spend, then the economy stays strong. But somewhere along the line, Andrew, we have to get the debt under control. Otherwise, you're just going to be working to pay interest, and we're getting to that point. It's very scary.
What's your view then on the US dollar, Ira, from here on? I guess particularly also most immediately you talk about the election and if Trump were to win, seen as being inflationary, obviously, with certainly with tax cuts and those higher tariffs.
Here's what I think's going on right now. Right now, you're looking at from the UK and certainly the European Central Bank. Just look at their big energy, their big mover, Germany. Germany's had nothing but problems. They're in a full-fledged recession. So you're going to get rate cuts there. Now you're going to get the rate cuts in the others. In America, and by the way, Bank of Canada, same thing. They're going to go very quickly. I was reading reports today where they're hoping to get 50 and 50. In other words, 50 points coming up now and then 50 in December. The U.S. is debating, do they go or do they hold at 25 points? In other words, should they pause or go 25? And that's giving the dollar the edge to a certain degree. Now, there'll be a point in time when everything starts crisscrossing each other. In other words, the dollar will stay too much with the interest rates if we don't cut deep enough, and then the economy slows down. And while other economies are cutting rates, their economy starts growing, and the two go the other way. You're not there right now. And that's why every day we wake up, it's the dollar gaining overall against something. It's one of the reasons I like gold. I've told you that all the way through, and here you're back to 2,700. It's a reason I haven't trusted China. All they do is talk the game. They don't walk the game. They came out 3 weeks ago with a good package. They told you what they're going to do. They gave you dates that they had to cut mortgages by on the 31st and the amounts. But then the Planning Commission and the most recent snafu the other day when we saw the vice premier on a Saturday come out, a Saturday of all days, coming out with a speech. And what did he say? We're going to do things. That doesn't work in this market. You've got to tell the market what you're doing, not you're going to do things.
Ira, thanks for joining us on Linn Associates.
Thanks for having me.
Quick check of where we're likely to start when we get going in a couple of minutes' time. On the open, a strong opening is on the cards. There is SPY futures up around 0.75%. Stay with us. The open will be just 2 minutes away.